Hello there, BoBo the Bitcoiner is back. Institutions are pushing the envelope now. Is Bitcoin going to 1 million? Is it coming? When I got into Bitcoin in 2017, a key narrative attracting new investor was the institutions are coming. The belief was that someday big Wall Street banks, pension funds, and sovereign wealth funds will pour billions, if not trillions, into crypto. And when they did, this tidal wave of capital would propel the market to unimaginable heights. The narrative turned out to be largely true. Back then, Bitcoin was trading $800 around there, and the market cap was barely $10 billion. Fast forward 8.5 years later, and the crypto market cap now is touching $4 trillion. In fact, much of the current bull market can be attributed to the world's largest asset manager throwing their weight into Bitcoin. BlackRock, IBIT, has become one of the most successful ETFs ever launched. So, yes, the promise of institution adoption, Wall Street entering a market once dominated by cypherpunks and financial mavericks, has been fulfilled. But unlike most people believe, there are drawbacks to this boom. Look, the institution's narrative got people so excited because they believe the real bull market would only start once the lack of Bitcoin and JP Morgan got involved. But the inverse is actually true. Sure, this institution investors has sent Bitcoin to all-time high. Only crypto enthusiasts believe possible 5.5 years ago. But the reality is that Bitcoin got bigger. It became harder and harder for the average people to hop onto the rocket ride. So 2017 was FOMO by retailer, and now it's being FOMO by Wall Street, banks, pension funds, and sovereign funds. Retail investors like us just can't make the same return as we could back then. The easy money was made by courageous souls willing to take a chance on Bitcoin before it went mainstream. When I came into the crypto, I was shocked by how much I have to unlearn. In traditional markets, if an asset rallies 200% in a week, a crash is imminent. Right? In fact, if a stock rise or fall 20% in a day, it triggers a halt of the day. But in crypto, 200% rally often signals another 200% gain is coming, and then another. And there's no halt to trading crypto at any time, as it is 24/7. So back in 2017, runaway moves like this were the norm, and each surge often led to an even bigger one. That seems crazy to me. Traders are trained to believe when prices goes up that fast, collapse is just around the corner. But crypto defy this expectation again and again. And because when Wall Street big feet come stomping into the market, they lower the risk. And with the lower risk come lower returns. It's just how the games work. However, some die-hard crypto are still in denial. They write essay claiming Wall Street is just getting started, that Bitcoin will rocket from 45,000 at the time the first ETF was launched to $500,000 in a single cycle, because ETF marked the moment the real institutional money started to come pouring in. But here's the problem. With that, which means some market maker somewhere is shorting swaps to offset the risk. It's the exact opposite of crypto's notorious diamond's hand, which hodlers through thick and thin. So after flirting with 120,000 2 weeks ago, Bitcoin began selling off. The moment the Wall Street pros returned to the desk on the Monday next. Back in 2016, Bitcoin would have kept rallying to new height without missing a beat. In early 24, I predicted Bitcoin would likely struggle to cross the 80,000 anytime soon. Sure enough, Bitcoin topped out just above 70,000 in March 2024 and then fell into protracted multi-month consolidation. That means Bitcoin and crypto more broadly is becoming a trader's paradise. That doesn't mean for all our gains are in the rear view mirror. We just need to be smarter about our strategy. For buy and hold investors, things are going to be more challenging. Wall Street is not going to FOMO into Bitcoin. It won't chase from 100,000 to $500,000 by year's end, not even 300,000. In fact, if you will likely never seen a move like that. Bitcoin will top around $150,000 this cycle. If momentum is very strong, maybe 200,000. I still believe Bitcoin is heading to 500,000 and beyond into the future. But it wouldn't happen overnight. Even in a few months, it's going to play out slowly, just the way Wall Street like it. Opportunities is still massive, but mainly for those who know how to navigate the crypto cycle. After staging a fairly strong rally in the early hours 2 weeks ago, Bitcoin dropped to near Bitcoin topped 230,000, and has now been selling off since, correcting as low as 116,000 before it clambered back to 118,000, and today at around 113,000. This little correction is nothing to write home about. It's about 8%, which is quite normal, even in the midst of a rally. Going forward, I fully expect rallies to evoke wave of profit taking shortly after they occur, which is exactly what we saw after Bitcoin hit all-time high. Beyond August, we shouldn't expect another significant peak before October or November. I'm still expecting Bitcoin at 150 to 200,000 by year's end, and Bitcoin will reach 500,000 to 1 million into the next decade. Thank you for watching. Hope this explanation helps you clear your mind. Thank you. Bye-bye.